Investing in the stock market can be intimidating, but the S&P 500 index has been a popular choice for novice and experienced investors alike. But what if you live in Australia and want to invest in the S&P 500? Today we'll explore the benefits of investing in the S&P 500, the ETFs you can choose from, and the steps you need to take to start investing there. The S&P 500, which is also known as the Standard & Poor's 500 Index, is a stock market index that tracks the performance of 500 large companies listed on stock exchanges in the United States. It's considered one of the most widely followed equity indices in the world and is seen as a barometer for the US stock market. The companies included in the index are chosen based on market capitalization, financial stability, and liquidity, among other factors. Think of it really as a one-stop shop for your US stock market investments. By investing in the S&P 500, you're essentially investing in a diverse portfolio of some of the biggest and most successful companies in the world, such as Amazon, Microsoft, and Apple. It's a popular choice for both seasoned investors and those just starting out, and it has a history of delivering strong returns over the long term. It was also one of the first indexes to be tracked via Vanguard mutual funds, making it a way for investors to invest in the stock market rather than individual stocks. Investing in the S&P 500 through an ETF can be a simple and cost-effective way to access this market. ETFs typically have low cost ratios. They can be bought and sold like individual stocks, making them a convenient option for beginner investors. The S&P 500 also has a long history of strong performance and is considered one of the best indicators of the health of the US stock market. Over the long term, the S&P 500 has delivered an average annual return of around 10%. Remember though, past performance is not a guarantee of future results, and investing in the stock market always does carry some level of risk. Investing in the S&P 500 through exchange-traded funds can offer a number of advantages and benefits. It has a broad range of companies across different sectors and industries, helping to spread out risk and potentially providing more stability compared to investing in individual stocks. The S&P 500 has a long history of strong returns, and over time the index has tended to rise, reflecting the overall growth of the US economy. Investing in an S&P 500 can offer a convenient way for investors to tap into this growth potential without having to buy and manage individual stocks. There's also a few reasons why an Australian might invest in the S&P 500. The S&P 500 tracks the performance of 500 large companies in the US stock exchanges, providing investors here with exposures to the world's largest economy. When you invest in the S&P 500, Australian investors can diversify their portfolios beyond the local stock market and potentially reduce their overall risk. It offers investors the opportunity to potentially benefit from the growth and success of the world's leading companies across a range of industries. As the S&P 500 is denominated in US dollars, investing in the S&P 500 ETF can also offer a hedge against currency fluctuations. If you do need some support with investing in ETFs, check out my site for more articles, link in the description in the details below. So how do you invest in the S&P here in Australia? There's several ETFs that track that index. The three I want to call out are the iShares S&P 500 ETF, IVV, the SPDR S&P 500 ETF, SPY, and the BetterShares US Equity ETF, which is QUS. All three of these ETFs provide investors with exposure to the same underlying index, the S&P 500. I should also note, as an Australian, you have the option to buy an S&P 500 ETF here on the ASX or overseas on the American markets. Australian investors are more suited to the ASX listed stock due to the tax implications and simplicity, but you can buy either or via your online broker. The two ETFs, IVV and SPY, typically follow the weightings of the companies that make up the index. Apple is the largest company, making up a 6.5% weight of the S&P 500. So, for example, if you were to invest in $100, $6.5 of those would go to Apple. QUS is a bit of a different spin on investing in the S&P 500, as the ETF follows equal weight and exposure, meaning you'll be investing in all 500 companies equally. If you would invest $100 in QUS, it means 20 cents goes to each of the 500 companies within that index. Each ETF has its own approach, so it's important to understand the differences and the angle you're looking for before you invest. One note before you do continue down this path is to compare fees and performance. They are some of the absolute cheapest ETFs going around though, due to their long history and popularity. An easy way to do that is simply Google the ETF that you're looking for. Here we've got IVV. If you scroll down and you can find its product page. Loading that, you can see all the information on the ETF, including its cost, such as management fee, or its performance over time. There might be a couple of extra questions you're asking yourself now about the S&P 500, such as, will the ETF pay me dividends? Yes, the S&P 500 ETFs generally pay you dividends. These ETFs, such as IVV or SPY, will track the performance of the underlying index and includes the dividends paid by the companies in that index. The ETFs pay the dividends to you, which are being paid by the underlying companies within it. Short answer, yes, they pay dividends. You've probably also heard a lot of news and noise around the S&P 500 and wondering whether it's still worth investing in. If you find any long-term historical chart, you'll see the S&P has performed really well over a long period of time. And if we zoom into history since 2000, despite facing several market downturns and recessions, the S&P 500 has consistently grown for the last 2 and a bit decades. From the year 2000 to 2020, the S&P has delivered an average annual return of roughly 7%. Another great benefit of the S&P 500 is the ability for it to move as the market does. The 500 companies included change over time, so you get 500 strong businesses to invest in. If a company grows, so does your investment in the business. At the time of recording, I did note that Airbnb, a company that only launched on the stock exchange a few years ago, is now joining the S&P 500. So it's an example of companies that move in and out of that portfolio. So where does that all leave us? Investing in S&P 500 ETFs here in Australia could be the smart choice for those who are looking for a long-term investment. These type of ETFs provide exposure to a diverse range of high-performing US companies and have historically delivered solid returns over time. I believe investing in ETFs is the modern way to go about investing in the stock market. It's just so easy and so accessible through online brokers or investing apps these days. Overall, the S&P 500 has been such a strong performer, not just since 2000, but for decades, and it's still considered a good investment for those who are willing to weather short-term market fluctuations for long-term growth. But it is important to carefully consider your investment goals, risk tolerance, and overall financial situation before investing. The S&P 500 ETFs can offer a solid foundation for a diversified investment portfolio. Hope that all helps. Like and subscribe if you're enjoying this, and happy investing.